I mean, based on the latest evidence, are you confident that economic activity is going to rebound faster than when we last spoke in January?
Good morning, Yusuf. Israel has enjoyed a very fast and efficient vaccination program. Although it took a while, we have seen morbidity rates decline significantly, and that has opened up the gate for uplifting many economic limitations. And we're seeing economic activity rising all the time, even in segments that were adversely affected, such as restaurants. I was in a movie theater recently, sports arenas. And so we have every reason to believe that barring a new variant that is resistant to the vaccination, we are going to be on a very fast pace of growth. We're talking about 6.3% for 21 and 5% for 2022. Mm-hmm. That will put us about 1.4% away from the output gap, or from where we're supposed to be had the corona crisis not shown up.
Governor, inflation has turned positive. I mean, a lot of it is related to base effects, but there could be more down the line. I look at some of the inflation conversations we've been having throughout the last few days on Bloomberg television, and the supply constraints are real, and there's concerns that this rallying commodity price is going to keep going and going to keep going. Are you still of the view that inflation is likely to be transitory, given that reality?
We are seeing a lot of bottlenecks, as you mentioned, both on the supply. We're seeing various, obviously, pent-up demand. And the big issue, not just for Israel, all around the world, is to assess whether the inflation, there is definitely a rise in the level of inflation. For example, in Israel, we were at negative inflation during the crisis, and most of the Monetary Policy Committee focus was supporting economic activity. We are now likely to enter into our target range, which is between 1% and 3% even next month. But there's definitely an uptick in the inflation level. Whether it's transitory and how long that transitory effect might be, I think everybody's trying to assess that. Once there is if there is a prolonged sequence of inflation realization, that will also affect inflation expectation, and that by itself is going to affect the length in which we'll see inflation rise. But I don't see yet a risk for an inflation eruption, let's say, on the other side of our target range, which I mentioned was 3%.
Governor, let's talk about the Israeli shekel, because that has been on a run for a wide variety of domestic reasons. I'm wondering whether the strength of the shekel contributes to dovish policy longer than would normally be warranted.
As you know, the shekel has appreciated pretty significantly towards the end of 2020 and the beginning of 2021. A lot of it is due to good reasons. We've seen growth in FDI. We've seen rebalancing of profits of institutional investors coming back to Israel. We've seen investments in unicorns in Israel, and generally a growth in the current account surplus. That's on the one hand. On the other hand, we've seen a lot of transitory issues, such as Israelis not going abroad, a decline in imports. In lieu of all of that, and in the midst of the crisis, we've put in place an unprecedented program of announcing that we will purchase $30 billion. We're about 2/3 into that, and extraordinary times require extraordinary measures. Obviously, during such times, you want to take safety margins with respect to the effect on exporters, what those in turn mean to a fragile labor market.
As I mentioned, we're just a bit pressed for time. Sorry, if I can,
I'll just finish. We won't be shy extending it. We won't be shy extending it. And on the one hand, and on the other, of course, it will depend on the development of economic activity as we go forward.
Israel might be looking at a fifth legislative election since 2019. We've got violence flaring with Palestinians in Jerusalem, with international condemnation. What kind of damage does this kind of political crisis inflict on a nascent economic recovery, as far as you can tell?
First of all, we would like to see things come down and things go back to normalcy. In terms of the political instability, obviously, we've got in place an economic system to support the short-run exit out of the crisis. Obviously, a government in place would do it would be better. But the real problem is the long-run effects of not having a budget. A new government, a stable government, is needed in order to deal with the many economic issues that Israel has faced even before going into the crisis. And that's increasing human capital, investment in infrastructure, reductions of regulatory and bureaucracy, basically improving productivity for the next 5 to 10 years. For those steps, you need a government that sees itself as a stable government for a prolonged period. Mm-hmm. Such a government will need to face, on the one hand, such investments that are about 2 to 3% of GDP for several years, and on the other hand, deal with fiscally responsible way dealing with a structural deficit that we had all along. We at the Bank of Israel, by the way, are making plans for any economic plans for any such government that will be at the helm once it's there in place.
Quick last point on your FX reserves. They're approaching $200 billion. That's almost 50% of GDP. Is that becoming a bit of a concern, a bit of a burden?
As I mentioned, we won't be shy extending our current program. Also, the constraint of the reserves, that's always in the background, but given that we have more degrees of freedom in terms of the Monetary Policies Committee, ability to invest abroad in various assets, that constraint is less binding than it was in previous years.